Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today, and the first one I'd like to look at is the euro against the dollar. Now here we can see an indecisive doji cross yesterday, but in its own way it was also a follow-on lower to the previous session's indecisive shooting star pattern. You see the doji cross had a very long tail on it. This fulfilled the aspirations of the shooting star pattern, type 1 bearish. Perhaps the two most interesting features of yesterday were, firstly, the low. This was right on the newly constructed late March to date uptrend, currently at 121.72. This looks like it might, just might, be a new rolling higher support. Secondly, the close was just below the previous support, the lower bull channel line, currently at 122.26. It actually seems the new uptrend may have taken over from this lower bull channel line. Overhead, we now have the reassigned two downtrends, the 2008 to date move, currently at 122.59, and a 2011 to date move currently at 122.60. So far today, further move lower, below the broken lower bull channel line and towards a new uptrend. Now further down we have the significant March low at 121.52. The next chart to look at is cable, aka sterling against the US dollar. A counter to the counter bullish harami yesterday, and in effect the most limited of all follow-ons to the previous session's attempted nuclear combination of a key reversal down, bearish engulfing pattern, and a bearish closing black Mariposa. Yesterday's action ably deflected the bearishness seen in the previous session's actions. The market did indeed penetrate the 141.43 support, the second in the trio of well-publicized support stroke resistance levels, but reverted back up to close well over it. Overall, it seems the indecision we've seen in recent weeks, which I thought may be coming to an end, is still alive and well. The current bullish forces, evidenced since September of last year, still battle and rub up against the latest challenge seen overhead. The trio, of course, of original overhead resistances. The market continues to still travel higher between the lower tie and below, currently at 139.10, together with its long-term partner, the medium moving average, currently at 138.95. Whilst above we have the middle time, currently at 143.70 as resistance. Both times are from the June to September 2020 bullish shift pitchfork. Now please always remember, this pitchfork has given the bullish angle of attack of this market since September of last year. The new feature is the short medium moving average, currently at 139.42, which is now shadowing the lower time and its partner, the medium moving average. As a postscript, this latest move up can be traced back to the weekly key reversal up made 4 weeks ago. So far today, a move back down to the support stroke resistance at 141.43, as well as the short moving average, currently 141.41, where it has held for now. The next chart I'd like to look at is euro against sterling. A bearish harami yesterday, there was also an indecisive spinning top. This counters the previous session's dramatic move up of a combined key reversal up and bullish engulfing pattern. On the one hand, a bullish pattern, and on the other hand, by apathy. The market ended up being in between the short medium moving average overhead, currently 86.23, and the short moving average below, currently 86.09. In part, I suspect the move down has in some way been prompted by the rapidly descending medium moving average, currently 86.63, which is now well below what had been the previous overhead resistance. That was the April 2020 low at 86.69. Meanwhile, below we also still have the extension of the flat trend line from the March base descending triangle at 85.45. Now, I've spoken for a while about a small pattern emerging, a possible small bear flag pattern over the last 3 or 4 weeks. Nothing is for certain as yet, and whilst last week's weekly key reversal down helped, the recent daily key reversal up this week did not. It still hasn't been triggered as an idea as yet. However, I still think it's worth considering, as we now have the medium moving average coming down to mix it with the market. This is enough to maintain the preliminary target X for such a pattern in the 85.20 area. So far today, a little lower, so far, dipping below the short moving average cautiously. The next chart to look at is the US dollar against the Indian rupee. A shooting star pattern yesterday. I'm uncertain as yet whether it is the common type 1 bearish pattern or the rarer type 2 bullish pattern, though I have a suspicion it might be the latter. The top of the market was, unsurprisingly, capped by the flatlining medium moving average, currently at 73.28. Just above that, we also have the flatlining long moving average, currently at 73.47. I suppose this was all a continuation of the reversion back up from the failed attempt to break down through the congestion zone below, stretching from the 50% Fibonacci on the July 2019 to April 2020 move at 72.64, down to the February 2020 high at 72.05. It is worth noting that a pullback up may move as high as the 74.40 area and still keep the bearish incentive. However, there's a lot in the way between there and here. So far today, a higher open over the short moving average, currently at 72.99. Another attempt higher over its run up has stopped shy of testing the overhead medium moving average, and prices have moved back down towards the open. That wraps up today, so good trading and stay safe in the markets and in real life.